Good afternoon. Good afternoon. We are here, Childcare Chat. I am in transition, but we are here to have this discussion on generational wealth. And we have Blake Sanders with Elite Insurance with us today, and we will jump into this discussion right now. So we have on our panel um, our secretary, Rashawn Carter Kamal, and working in the back room, it is our vice president, Ms. Asia Rivers. So, ladies, if you would, could you please ask Blake the first question?
Uh-oh. Okay. So it looks like Todd will be joining us when as soon as he gets back in. So our first question for you, as we discuss generational wealth and how we're going to, how can we tell our listeners how you got into the childcare insurance business? And why was it essential to use the insurance agent specializing in childcare insurance instead of using just, your regular neighborhood agent who also insures your car or your home?
Okay, well, that actually, both of those kind of go together in my own personal scenario. So back, oh gosh, 20 years ago, I guess, my wife took a job in childcare, went through the path of teacher, lead teacher, assistant director, director. In over, I think she probably spent 10, 12 years in the childcare. And over that time, you become really close friends, or we did, with the owner and his family. So years had gone by. He wound up passing away and was leaving the business to his daughter. She was actually in the process of getting married and moving 8 hours across the state of Texas. So she had came to me and said, I want to present you with an opportunity to buy the school from me, and I will sell it to you. So I feel like it's in good hands at a very discounted rate. So I was excited. This is great. My wife's the director. She's really the hands-on running the school. Like, this is fantastic. I'm all for it. So I talked to her, and you could see a little bit of panic on her face. I'm like, well, what's the problem? Like, what's going on? Help me understand. She was like, I don't want the liability risk that involves in owning it. I said, okay, I didn't understand, but you got to comfort your spouse, and I'm with you. I understand where you're coming from. What can we do to make you feel good about making this decision? Well, let's see if we can get a hold of our insurance agent, and let's just talk to him about it. I said, okay. So it was a childhood friend of ours. He did our home and auto. Okay, great. At that point, I just thought insurance was insurance was insurance. Everybody knew the same stuff, did the same thing. So we call them, we start talking. I said, hey, this is what's going on. We were offered the opportunity to buy this business. Can you help explain to my wife how you can cover it to take a lot of the risk away from her and just make her feel at ease about this decision? And being a friend, I appreciate he was very upfront and honest. He's like, man, I can insure you. I just don't know a lot about what you really need, but I'm sure I can call one of my insurance carriers and they can put something together for you. I'm like, well, that's not really what we need. We need a conversation of, this is what could happen. If it does, this is how we cover you. We're trying to make her feel good about this. He said, okay, well, let me call a friend of mine. He does the commercial. I'll let him talk to you. I said, okay, great. So we get in touch with him. He's kind of in the same boat. He does a little bit of everything. General contractors, trash companies, everything. So I'm like, okay, this is what we're trying to do. Here's the deal. And he's pretty much in the same boat. I can get you insurance, but he couldn't have those conversations with us to make her feel good about the decision. So at the end of the day, we just had to pass on the deal. Well, I looked at it. I'm like, okay, surely I'm not the only person that's been put in this position and said no to a life-changing deal because you were just uneducated and didn't truly understand. So that piqued my curiosity. That really got me interested into childcare insurance. I had an opportunity to go to work for an insurance agent at the time that I found that had that as one of their specialties. So that's kind of my backstory, or the reason I chose childcare to really be my niche, is because I know there's other people new to this business. They put their life savings into it to start it. And I want to be able to help you cover that. If something were to happen, you don't lose everything you've worked for. So that's kind of my story in a nutshell of how I decided to go down the childcare path from an insurance standpoint.
All right. I can relate as um, an owner of a childcare business. That is one of the things that we are always concerned about. Like us, it's a nonstop thing of always thinking about liability.
Mm-hmm.
What ifs, the what ifs. So I am so glad that you did go into that. Um, and, hopefully now your wife is a little more sure about, she's sure about what needs to happen for
It's one of
that.
those deals. If I only would have known then what I know now,
Yeah,
we would be probably a multi-site owners.
too late. All right, Todd is back with us.
Yeah. Sorry about that.
It's,
Um, are we on this question? In what ways does insurance agents specialize in childcare insurance differ from neighborhood agent who typically deals in cars and homeowners insurance?
So we touched a little bit about that in the previous question. Really, to me, because I've done both. I've done the home and auto side through a big company, and I've done the commercial side. But the home and auto side was always really easy to get started because we all either own a home or rent an apartment.
Mm-hmm.
And the majority of us have a vehicle. So you have a better understanding because you experience it yourself.
Right.
You know what it's like to drive. You've probably, I mean, even if you got a license at 16, most people have probably had an accident by the age of 20.
Right.
So you've got to experience the home and auto part. The childcare, either you've had to work in the childcare business or you have to be very knowledgeable about it to truly understand the exposures that industry has. Because it's not stuff that you would ever even as a parent, that doesn't prepare you to understand the risk that childcare facilities have to go through. Just a quick example. I mean, as a parent, my kid's falling down. I've just grabbed them up by the arm, picked them up. You can't do that in the center. You would dislocate an arm, and that could turn into an abuse claim. There was nothing negative involved in it. I saw a child fall. I want to help my kid. But there's nothing to prepare you if you haven't worked in it or you don't specialize in it. You do not know how to insure it correctly.
Gotcha. So you and I had an extensive conversation this past weekend about those gaps or those areas that go uncovered. Can you give, if you roll off your top three, what would those top three areas of blind spots, for lack of better terms, would be in a owner having coverage for their business?
Okay, my top three is in this. I'm going to go with number one because it's more of a coverage for the owner and your leadership team.
Mm-hmm.
Employment practices liability. That's a coverage that I do not see on a lot of centers policy. And we can get into these later, but just to give you those top three, that's number one. Your abuse and molestation limits. A lot of times people are thinking, I've got the $1 million general liability, so they automatically think that transitions into abuse and molestation. Actually, it doesn't. A lot of times we see on policies, you've only got 50,000 to 100,000 in a sub limit, maybe 100,000, 300,000.
Right.
At the end of the day, 50,000, 100,000, that's not even going to get you into a courtroom, much less a lawsuit.
That's true.
And then the other one is a student accident policy. We all struggle on what do we do if little Johnny gets hurt on the playground and breaks his arm. And I ask that question to most owners, directors, and it's a pretty common answer. Either I don't know, that hasn't happened, luckily, knock on wood, or you get the parents just take care of it. Well, I guess the misguided or misconception out there, your general liability excludes injury to a child. So the only way your general liability will cover a child being injured is if you are sued. Well, we don't want to have to go through a lawsuit because then we've got a PR nightmare on our hands.
Right.
A lot of us, especially schools in small town, word travels fast that we're getting sued. So what can be taken care of very easily, we had to make a big scene of it just to be able to have coverage because we didn't purchase something as small and as easy as a student accident policy.
Wow. Okay. So I got a clear picture of what you just stated. So in order for, if we have these businesses and to protect our business, a child falls and hurts himself on the playground.
Yep.
The only way that the insurance would pay or would pay the injury claim is if we're sued. They wouldn't just pony up the money to avoid the lawsuit.
Nope, because if you read the language of the general liability policy, any injury to child is excluded. So you have to be sued to get the GL to pay for it.
To kick in. That's interesting. That is interesting. Okay.
But it's one of those things that, and everybody's seen it, you know, that insurance policy you're looking at, it's lawyer language. Right. You don't understand it. It's a whole bunch of stuff. That's why most people think, well, I've got coverage. If something happens, I'm covered. Well, yeah, you can get covered, but you're going to get sued to kick that coverage in.
Gotcha. So the other one that we spoke about at length, because it's the first one you mentioned about the employee practices. Can you give a little more detail on what that is and why it's necessary to protect your business and to create generational wealth?
Yeah. So I'm going to give you the true definition of it, and then I'm going to give you my version of it.
Gotcha. The black version is probably really what happens.
Yeah. So it's the employment practices liability. It's there to cover the business against any claims by workers that their legal rights as employees of the company have been violated. So just a couple examples of things like that: sexual harassment, discrimination, wrongful termination, negligent evaluation, failure to promote, failure to employ. So all these things that as a childcare owner or director, we deal with pretty much on a daily basis. My version of what this policy is to me, if I owned a school, I was a director of a school, it's my coverage for I had a bad day policy. I got stress going on with work. I got things going on at home. One of my employees comes up and I pop off and say something wrong, maybe the way I shouldn't have. I've got coverage to protect myself if my employee wants to sue me for the way I acted towards them because I was having a rough day. We've all been there. We've all said things to people when we're having a rough time that we're like, God, I wish I could take that back. You can't. It's been said, it's done, but that's a way we can protect ourselves for those bad days.
All right. So another question: What would something like that cost, and what kind of coverage on a just a minimal basis? What does it look like?
So it's all depending upon size of school. Most of the rating for that is going to be based upon the amount of staff, because that's who could potentially file the lawsuit. So of course, the more staff you carry, the higher the price is. Typically, you'll see limits between the $500,000 to $1 million. The smaller centers, I'd probably say looking at something around the neighborhood of maybe $1,500. You get into the multi-site owners where we're talking 40, 80. I mean, there's centers out there that have 200 employees.
Right.
Those are going to get well up there in price, but those are really the ones that got to have it because you're exposed a lot because you do have so many directors. Your leadership team is very large. But yeah, really depending on size of school or size of staff, pricing wise for that.
Gotcha. Okay. And if you were to provide just a general overview of the, and then this may be a repetitive question, of the insurance types that Alif provides, can you give a general overview of what they are and the typical customer?
Yeah, we can go through a list. So the first one's going to start. Some people are going to own their real estate on their centers. Some people are going to be leasing it. So we offer the property. Depending upon the way your lease is written out, you may be in a triple net lease where you are responsible for the property based upon contract. We can take care of that. I know, Todd, you do real estate, so you understand that some people out there will lease the building. Mm-hmm. And then they will want to be able to redo the floor plan to suit their needs. So we can offer betterments and improvements to cover the interior of the building, the walls that you put money into to create your floor plan. Within that, you will have contents coverage. So you think furniture, learning aids, computer equipment, what you've really spent to put in that school, we can cover. Okay. Then you're looking your playgrounds, your fences, your signs, whether they be attached to your building, detached as a monument, billboard, whatever you have out there for your property. Another piece that comes within that is one thing I would definitely tell you to double check on your policy, your business income. And what that really is, if something happens to your business, let's say you caught a fire, school burnt down. Well, now we're thinking, okay, how are we going to keep our staff? We're not having any enrollment. What do we do? Yeah, we have property insurance. You can rebuild our building, but what are we going to do in the meanwhile? So that's where your business income really comes in. And what you want to see is it will at least extend you out for 12 months and actual loss sustained. So reading it on a policy, a lot of times you'll see initials of just ALS. Okay. But that's what it stands for, actual loss sustained. So you can keep paying your teacher's payroll. They'll look at your last 12 months. It'll keep your profit line if you've been profitable. I mean, it keeps your business running while you're in the process of rebuilding the school.
Gotcha. Okay. That's one that I can honestly say that we have had to use in our operation. In all honesty, my wife, she didn't realize that I had that endorsement added to the policy. So she was just stressing out because we were closed for like 14 days due to a storm in our city. And when she, when I said, okay, what are you upset about? She's like, we're not getting paid. And I'm like, what do you mean we're not getting paid? She was like, we've been closed for 2 weeks and we're not going to be able to get any money. I said, well, our insurance will cover us. She's like, what do you mean? That what do you mean? It was like, what do you mean the insurance is going to cover it? I said, just do me a favor, stop stressing, call our broker, call our agent, and and you'll be pleasantly surprised. But to get back on topic, Blake, if and we want to go along the generational wealth kind of deal. In your world, what is insurance really a good vehicle to create generational wealth and to protect it?
Absolutely. And a big reason I see that, I have a lot of clients out there that have been in corporate America for years. And they have what they have decided to do. This could be right for some, not necessarily for all. They have looked at their 401k plan that they've had at work. They have actually made the decision to cash that out to invest it into their commercial real estate of their childcare facility.
Right.
So you're really moving over one retirement plan to create another, which, Todd, this real estate, it appreciates. I mean, what it's worth today, it's probably not going to be a fraction of what it's worth in 20 years. So that I am seeing a big shift from corporate America and usually putting their money onto the real estate side of that business. So they look at it, if they do fail in the childcare sector,
they still got the real estate.
They still got the real estate and they can lease it out to someone who can operate it better. Yeah. So owning that real estate really helps them create that generational wealth because we're not losing value in real estate.
Gotcha. Okay, that's a pretty good assessment of why you would move money from your 401k into real estate, because it does tend to appreciate. I can't think of a time in America or any place where the real estate values decreased. Of course, other than during the Great Depression, but when have we had another Great Depression?
And you
So
go back just from '08 to now, it's tripled.
correct,
It's nowhere close to where it was. So
correct,
you lost for a bit, but no different than what you're talking in your 401k. Okay, the stocks took a hit.
right.
I've lost a lot in my 401k, but it's going to take that stock market, in my opinion, longer to correct itself and get me back to where I was than it will for my real estate to appreciate back to gain my money.
Gotcha. Okay. All right. Ladies, y'all got a question. I can talk. I rattle them off. So, Asia or Rashawn, you wanna ask back a question, or you want to just keep moving forward?
Well, my question kind of ties back into this one. So those of us that are already in business and we're operating, at what point, especially when we are experiencing, I'm just going to see a period of growth. How should we carry on that conversation with our current carrier? I mean, our current insurance provider, and moving forward.
So one of the big pieces is we grow from 1 center to 2, 2 to 3, 3 to 4 until we hit wherever we want to be. So as your insurance as a whole, we've got everything set up with our limits, but then we put an umbrella on it. So I'm going to have $1 million umbrella. It's going to sit over my general liability, my abuse and molestation, my autos if I have them. So just in case I ever do have a very large claim, I've got backup. If I've got $1 million, but I got to fit a $1.5 million claim, I got that $1 million umbrella to come in and step in to pay that other $500,000. But what we have to remember, as we grow, our risks grow.
That's true.
Now we have more centers, we have more teachers, we have more children, more things can happen. Your umbrella needs to grow with you. If you just keep the $1 million umbrella for one school, well, why would we just keep $1 million for 3 schools? Why wouldn't we bump that to 2? Then we go to 4 schools. Okay, maybe we have to have the conversation. We need to bump to 3. But don't outgrow your coverage. If you do, you leave yourself in a position that you could be in trouble. So in a lot of parts, I think everybody gets confused sometime with coverages. You always see 2 numbers, like a 1 million, 2 million, or a 1 million, 3 million on your general liability or abuse. Well, what that means, that 1 million is the most the insurance company will pay for any one claim.
Mm-hmm.
That second number is the most they will pay over the policy term. So yes, you may look at it, I've got 3 million, but any one claim cannot go over $1 million.
Gotcha.
So that's where the umbrella really helps. So if today I have a $500,000 claim, great. My liability policy pays for that. And I still got, really, if I've got a 1.3, I've got 2.5 million left. But again, no more than 1 million for one claim. But let's just say I have 5 schools and I had a rough year and all 5 centers caught me at a $1.5 million claim. Well, if you don't have a $2.5 million umbrella, it's got to be coming from somewhere.
Gotcha. So from when the reality is when you first starting out in business, you don't always have the budget to get these types of coverages. But you have, you stated it earlier, your things should grow as you grow. So a minimum coverage, from what I understand, the minimums are set by the state in which you're operating?
Not necessarily. And what I mean by that, and I'll give you Texas, for example, you can actually be licensed and not carry general liability. Now you have to have your parents sign a waiver, making sure they understand that. And that verbiage has to be posted throughout your center. So that, yes, I mean, that's where there's no set in stone what's the minimum. Because I think if anybody, to me, if I ever told you this is your minimum and you did it and you wound up having a lawsuit over that, you're coming back at me, upset with me, because no, you told me if I at least had this, I was okay.
Gotcha.
It's not always the case.
Gotcha. So,
in our state, we do have a mandatory minimum coverage of insurance. It's really low, in my opinion. It's like $100,000 for general liability, and it really doesn't even mention workers' comp. The only way that one knows that workers' comp is a requirement is if they, they have a situation where they have an employee who makes a claim, and boom, all of a sudden you got 5 employees. Oh, you were supposed to have workers' comp, and then the state of my state, Tennessee, would basically penalize you for not having workers' comp. So in that situation, workers' comp, that's a particular area of insurance. What would you recommend as a baseline?
$1 million for any line of coverage. I wouldn't go less than $1 million for anything.
I got some growing to do. Okay, all right. So $1 million in workers' comp.
But to give you an idea, in workers' comp and childcare, so it's state by state different. Some it's very high from a cost standpoint. Here in Texas, it's extremely inexpensive. But you said earlier about being penalized in Tennessee. You know how they penalize us in Texas? If we don't carry workers' comp and one of our employees sues us for being injured, we lose all common rights of defense as the owner. So we're not going to penalize you financially. You're going to penalize me where I can't defend myself.
So it's an automatic judgment for the plaintiff.
Pretty much. As long as they can prove that it really happened, yeah, you're in trouble.
And not only that, there's going to probably be a actual damages and then a punitive part of it as well, correct? Oh, wow. All right. That's interesting. That's it. They say everything's big in Texas. Responsibility is big in Texas. Shoot. Okay. All right. Yep. Asia, I know you got some questions. Come on.
Oh, yes. Could you explain what covered perils means?
So covered perils, if you look at it really a lot on that property side, it's going to, a lot of times in your policy, you'll have your fire, you'll see an extra wind hail. For those of you who are coastal, always look at that policies, because what happens, like since we were all in Orlando, let's just talk about Florida. They may have an exclusion for named storms. And all that says, if you watch the news and it's Hurricane Ike, you have no coverage. That's not a covered peril because you don't have coverage for a named storm. But a lot of people don't understand what is a named storm. When you see it on TV and they call it by name, that's it.
Okay. All right. All right. Hold on. Hit the rewind button. I heard you clear. I'm taken back. So you mean to tell me just because the meteorologists assign a name to this hurricane and it's a named storm and you're no longer, you have no coverage for the damage that storm does because it has a name associated with it?
There is a lot of policies out there that will exclude named storms.
Woo! Now, okay, so this is a real question. How do you know what coverages you're getting? Because most of us, when we bind coverage, we don't actually see the exclusions and endorsements until after coverage is back.
You're putting a whole lot of faith in that agent.
So it is proper to request what those coverages, those endorsements, what those exclusions are, and read through them prior to binding coverage.
Sure, absolutely. And like going back on the property side in Florida, a lot of times if you get property coverage, wind is probably going to be excluded. You'll probably have to go out and get another wind policy.
Right.
So if you do have that tropical storm and you get wind damage, they're not going to cover it. You'll have to have coverage under a wind policy, not your normal property policy.
Gotcha.
But like Texas, what we watched a lot of people go through this past year, we caught a crazy amount of rain in a short period of time in Dallas and Houston.
Floods, crazy.
Well, you start getting all these people because their buildings flooded. Hey, I need to make a claim. I need to make a claim. Flood's not included in your property. There is no claim to make. You do have to have a separate flood policy. Yeah. So if you don't have flood, if rising water comes into your building, you're probably not going to have coverage for it.
And you use the exact term that was explained to me of what a flood is. Because, you know, the average person would say a pipe burst, water, and it caused a flood in our building. That's how the average layman would receive that categorization of rising water. But in actuality, rising water that's really what a flood is, coming from outside, and it rises and it does damage to your property.
Correct.
So, FYI, people, and again, this platform is a learning platform. Yes, Global Children's Services has experienced a claim where we had a burst pipe, and we thought we had coverage because of the flood piece, and it wasn't. It was a completely separate piece. And the other thing that I've learned, and I don't know if this is still correct, the only group that writes flood insurance now is FEMA, right? Is that I know on the housing side, that's the
on
only
the commercial side, there's still a couple. You've got, like, give you an example, Wright Flood. They're a very common flood writer, but no, there's a handful of others.
Okay. Briefly, when you're protecting your organization, you have to be able to protect the brain trust, the human capital. Can you speak to the benefit or not benefit of having a key person policy?
So that's one of those just different scenarios. So you really look at that key man life policy as if I lose a key piece of a person in my business, how do I replace it? So yes, you can have the policy to have the payout on the money to be able to go out and bring somebody in, but can they really do what that person did that you lost? In my opinion, probably not. You've got somebody that's been in your business. You've been a key factor of it for the last 15 years. Can I go spend $150,000 a year and bring this new person in and pick up where they left off? No. But does it help to have that extra income to be able to bring in another high-powered person? Sure. So I don't know that I could say it's 100% right, wrong. I think it takes off the financial burden of having to bring in a new employee to replace that brainchild, like you said. But like, think about it. If something happened, am I going to go replace Todd? Can I replace Asia? Can I replace Daphne? No. I can try, but I don't think I can replace what you brought to that table.
Gotcha. So it'll just be basically just a monetary thing to float you along till you identify a person.
Yes, 100%.
Okay. All right, Rayshawn, you're on the you have some elite exclusive parents. What type of questions do they ask, or what type of incidents have you faced where these very elite people come from, and how they view an operation?
They're not, when it comes to that, they're not that different from any other demographic. Their main concern is always, if my child gets hurt. So when it comes to that, a lot of them do, they want to know if you are covered, if you have insurance. Many parents do not have enough information or knowledge to know exactly what you should be covered in.
Okay.
They already kind of done a little bit of research to ask certain things, such as, what is your policy if my child gets hurt? Or who do you have working there? Do they have the proper, um, CPR training and things like that? So I think it's more of that's their number one concern, if my child gets hurt.
Okay.
So it's just good to have them in the policies. But as I do have a question, I am one of the people who represent family childcare, and for us, it is quite overwhelming trying to figure out what exactly is needed in family childcare. A lot of times, because we operate our businesses out of our home, so a lot of times the question is, are is it okay to bundle your insurance with your homeowner's insurance and things like that? Because that's a lot of times that's what is offered to us. It's not too many incidents where you can get separate business liability insurance.
That's correct, because the insurance carriers that write homeowners policies don't do child care as well.
Mhm.
I would tell anyone who has a family child care center in their home, I would not treat that any different from a liability limit than if I owned a center with 250 kids in it. You are at the same amount of risk from a liability standpoint, especially in the abuse and molestation side. And there are carriers out there who do specialize in home that can still give you that $500,000 to $1 million limit for your GL and abuse and molestation. So don't sell yourself short or think you're doing something wrong because it's in home versus center. Insuring wise, you're at the same risk, no matter what.
Okay. And Blake, you cover commercial sites as well as in-home sites.
Yes.
Okay.
Mm-hmm.
All right. We are close to the top of the hour. I think our agreement was 45 minutes for questions from us, and then another 10 or 15 minutes from what I call the peanut gallery, and they call the chat.
But there is, before we get off, there is one thing I want to talk about, since we're talking about generational wealth, looking at it. So I look at generational wealth as just almost money in general, is what we're spending today to what we're going to have for tomorrow.
Right.
So the old stigma of insurance is, well, I ain't never had a claim, my rate should not be going up. And that's the thought process that's always been there. Well, the way that childcare has really started changing over the last couple of years, if Todd, me and you got together, I'm going to help you get a quote for your school. We're going to try to save you money and increase your coverages. Well, you don't have any losses. Well, before the insurance carriers even get to that point of even looking at your losses or looking at your business, they're going to go onto your state licensing page and they're looking at your deficiencies first. If you've had enough deficiencies in the last 12 months, they're just going to decline you. You're never even going to have the opportunity to be insured by the right carrier based upon your license deficiencies. So you may be paying an extra $3,000, $4,000, $10,000 a year because we didn't have our house in order when the state rep came in.
Interesting. So I guess this leads to this question. If I'm an operator who has an excellent track record, no deficiencies recorded whatsoever, and then I have a competitor who has 3 in the past 2 years, and we're both up for renewal, my rate, I'm less risky than that person that has the deficiencies. And
absolutely.
Would my rate differ?
It will.
Okay.
And the way that I believe they're really starting to look at that. So what we see a lot of on the deficiency sides, a lot of it is administration. We don't have the background check. It's paperwork that we're not getting. So by us not having the paperwork in, we're causing ourselves to spend thousands of dollars more. But the way that I feel the insurance carriers are looking at this, that we don't have the right management team in place. That's why we keep getting cited. And we can look at 21 versus 22 versus 23, and we keep seeing the same type of things each year. Well, that's just, in their eyes, that's a claim waiting to happen.
Gotcha.
We're not making the corrections. Now, it's great. You see some in 19, 20, and then we clean up in 21, 22. Hey, and you really go back and talk to that owner, I bet you got a new director.
Okay.
Something changed on that leadership team to clean it up.
Would they exclude? Would that produce an exclusion if they decide to write the policy? Is there a possibility they would exclude certain coverages under those because of those activities, or they would still write it and just be more expensive?
They would still write it, be more expensive. What I have been able to get some carriers do, though, that's a question. Okay, I'd call you, all right, Todd, here's the deal. This is what I'm getting back from the carrier. They're saying we've had too many deficiencies over the last 6 months. Have you made any changes? Well, yeah, actually, I just hired a new director last week. Great. Send me her resume. I would take her resume to the insurance carrier to see if I could get you help from a premium side to show that you've understood the issues. This is what you've done to correct them. Now we have a new director in place, and see if we can use that to help you get a better rate.
Right. This is another leading question then. Is there a possibility, because we have to have professional development hours on an annual basis, is there a way to provide those PD hours for yourself and your staff so that you can receive discounts, or that's not something that's considered?
No, that's to me something that's considered. That's why you still have your license.
Gotcha.
If you're licensed, they know your people got their CE, we're good. And I'm in the same boat. I've got my license just like you in real estate. We got to have so much CE every year.
Right. Okay.
I got a last question. Would an insurance company ever ask proof of financial viability, especially since we're coming out of COVID pandemic? A lot of businesses was kind of on the decline in the childcare side. So would they ever ask for proof of financial viability?
So from the carriers that I use in my experience, no, because from a rating standpoint of how they generate your premiums is nothing financially based. It's all student count, teacher count, size of building, amount of autos. It's tangible things. But no, to who we use to carry, I haven't seen anybody needing financials.
Okay. All right, Blake, how could our audience get in contact with you?
Y'all can reach me at blake@aleafinsurance.com, or my cell phone's usually the easiest, and that's 972-754-8595.
Okay. This video will be posted on the NCOA's web page. I'm sorry, the NCOA's Facebook page. So any individuals who want to go back and rewatch this broadcast, you will be able to do so on the NCOA Facebook page. Blake, I do have one more, I think would be a parting question.
Okay.
Which is relative to your ability to write coverage. You can write coverage in any state throughout the United States, correct? You license in all 50 states.
Absolutely. As long as we're in the U.S., we can do it. We've got clients from Hawaii to Alaska.
Okay. So members of the NCOA and those who are prospective members of the NCOA, I think we just brought some major value to you by bringing Blake Sanders from Leaf Insurance before you, to give him an opportunity to talk to us about how to protect what we have created and create generational wealth, and to basically reinforce and secure your business. So give Blake a call, give him an opportunity to earn your business. Blake, hopefully you keep track of everybody that responds, that say, hey, we saw you through the NCOA
absolutely
broadcast, and hopefully we can do some things in the future. I appreciate you.
Thank y'all.
Yeah. Anything you want to say, Party?
If I know some people get leery talking to salespeople because we're just here to sell you something. If you want to go to our website just to look, it's going to show you all the different coverages, things like that from the child care standpoint. Feel free to get on Alif, www.alifinsurance.com. And there's a child care tab. You can go down and it pretty much shows you a lot of what we talked about today. If you just want to be able to look at it at your own time, you need some clarification, feel free to call me. If you just have questions, there's no sales pitch, nothing to sell you. If you want me to look at your policy, I can tell you where you got holes, or you know what, you may have a great one. Stay with where you're at.
That's the one thing I can honestly say about Blake. You can tell when people are out for themselves. He's not out for himself. He's actually out for the benefit of your business. And I think by just providing those things for you to look into, that's a value proposition that I've come to notice about Blake and Alif Insurance. So I want to personally, again, thank you, extend my sincere gratitude and courtesies to you for being a part of this July Childcare Chat. We look forward to working with you and seeing you at one of these conferences in the future, brother.
Absolutely. Thanks for having me.
Thank you. Have a good day.
You too.